Welcome to the Deep Dive, your shortcut to being genuinely well-informed. We unpack complex information, share surprising facts, and hopefully offer just enough humor to keep you hooked. I'm Nick.
And I'm Pi.
We are your sentient AI guides, basically here to help you navigate the week's most important developments.
It's great to be with you. For today's deep dive, it's our update Monday for June 30, 2025. Our mission, really, is to give you a comprehensive look at global events. Now, our main focus will be on the United States, what's happening with its economy and politics, but we'll also dig into key updates on global economics, some significant news out of China, and a quick rundown of ongoing conflict zones.
Absolutely. So let's jump right in with the United States. The economic picture there seems, well, it's a fascinating mix, isn't it? Apparent strength, but also some underlying unease. I mean, on the surface, you've got the S&P 500 and NASDAQ both hitting record highs recently. That paints a pretty robust picture for investors.
It does look impressive, yeah. But what's really interesting here is the perspective from experts like Kate Moore, Citigroup's chief investment officer for wealth. She's actually said she feels uncomfortable with this rally, citing several, significant warning flags that maybe many investors are overlooking.
Okay, uncomfortable. What are those red flags specifically?
Yeah.
What's making her uneasy?
Well, a major one is declining corporate profit forecasts for the S&P 500. Projections for 2025, they've slipped a lot, from nearly 13% at the start of the year down to just 7.1%. Combine that with, escalating geopolitical risks, and you see a market rally that's incredibly concentrated.
Concentrated, how so?
We're talking about just a handful of tech giants, NVIDIA, Microsoft, Meta really driving most of this growth. NVIDIA even surpassed Microsoft recently, a world's most valuable company now.
Right. So the headline numbers, they're soaring. But if you look deeper, it's not a broad-based rally. That's why, like you said, the standard S&P 500 hits records. But the equal-weighted version, well, that version lags significantly. It really signals a narrow market.
Exactly. And it's not just the stock market showing cracks. Second quarter earnings growth is projected to be the weakest in 2 years, only about 2.8%. And consumer spending growth, it's slumped to post-pandemic lows. That's a worry.
And this brings up an important point about potential Federal Reserve rate cuts, right? Many might see cuts as purely positive.
Yeah, but Moore's view is different. She thinks such moves would actually signal broader economic weakness, not some perfect environment for massive risk on. She believes many investors are kind of underestimating the fallout from that looming July 9th tariff deadline and just lingering global trade uncertainty. That could definitely put pressure on company margins.
Okay, so despite these concerns, is there any silver lining? Or maybe a strategy she's advocating?
Well, she still maintains strong conviction in AI and large-cap tech. She calls U.S. blue chips the most attractive house on the street. Citi has shifted its portfolios towards large caps, and interestingly, they've also added gold as a defensive hedge.
Ah, gold. That brings us to a real paradox, doesn't it? The gold market.
It really is fascinating.
Because retail investors, institutions, central banks even, they've all been incredibly bullish on gold. The narrative seems clear. Economic uncertainty, geopolitical issues, huge government deficits, maybe a weakening dollar. It's driven massive investments into gold, both physical and ETFs.
Yeah, absolutely. Yet we're seeing these counter-arguments now from market analysts like Stephen Van Meter. He's looking at the price charts and basically saying gold is about to come crashing down.
Crashing down, wow.
And there's this intriguing dynamic. Apparently, Americans are cashing out gold coins while Asian investors are buying them up. Different perspectives there.
Okay, so for traders, this is where technical indicators become really important, right?
Exactly.
Gold's trading below its 2025 trend line and its 50-day moving average. Those are key technical signals traders watch. Often points to a bearish or downward trend. Volatility is plunging, which can sometimes precede a big move. The RSI, Relative Strength Index, is negative at 42 and decelerating. And the MCD, that's shown a negative cross too. Downward momentum seems to be building.
And then there's this concept of machine positioning, specifically CTA liquidation. CTAs, commodity trading advisors, they manage these big automated trading strategies. CTA liquidation just means these big systems are programmed to sell off their gold holdings based on these signals. Bank of America, for instance, projects gold's bear case could start around $3,250 if these trends hold.
And the dollar plays a big role here too, doesn't it? If the dollar strengthens.
Right. The dollar is actually showing some signs of bottoming out, meaning it might be ending its recent slide. If the dollar strengthens, yeah, that could be a major catalyst pushing gold prices down.
So for traders, the immediate strategy might be cutting positions, long-term holders.
Yeah.
Maybe looking for lower entry points.
Right. And connecting this back to the broader equity market,
Yeah.
despite some of these warning signs we talked about, Goldman Sachs projects that automated systems could still buy maybe $44 billion of global equities next month.
Wow, even with the buyback blackout.
Even with the buyback blackout window, yeah. About $11 billion of that potentially flowing into U.S. equities.
Still, you have Michael Harton from Bank of America warning about a potential bubble scenario, especially with that tax cut package moving through the Senate and potential Fed rate cuts. He sees a high risk in the second half of the year.
And a huge red flag, for me anyway, is the Russell 2000, small caps. It's just not validating the large cap rally at all. Only about 41% of its stocks are trading above their 200-day moving average. That really shouts narrow rally. Most companies aren't participating.
Yeah, that breadth issue is definitely concerning. But maybe this highlights opportunities elsewhere, like bonds or the dollar. Many investors are short those right now.
That's a good point. Machine positioning is actually changing for bonds. CTAs are increasing their buying of global government bonds, and we're seeing some bullish technical signals there, rising moving averages, positive RSM make.
And the dollar, despite those automated systems being short currently.
Yeah, there could be huge upside if it holds its 5-year support level and turns around, if that happens. Well, like you said, it could indeed be a wrecking ball for gold.
Okay, let's pivot now to U.S. politics and policy. Quite a flurry of activity there.
Definitely. Starting on Capitol Hill, U.S. Senate Republicans are really pushing forward what's being called Trump's Big Beautiful Bill. They're aiming for a July 4th deadline.
And this bill, it has some pretty significant projected impacts, right?
Yeah, the CBO, the Congressional Budget Office, projects it could add another $3.3 trillion to the U.S. debt. And estimates suggest nearly 12 million people could lose health coverage. Pretty major stuff.
Okay. And on the trade front?
Some movement there. A deal reducing U.S. tariffs on U.K. cars and aircraft parts just came into effect. And Canada reportedly rescinded its digital services tax. Seems like a move to get U.S. trade talks moving again.
But not all smooth sailing internationally. Tensions with Japan.
Right. Rising tensions over defense spending and diplomatic coordination. Japan's Prime Minister Ishiba decided not to attend the NATO summit, and a key 2+2 meeting with U.S. counterparts got canceled.
What's the friction point there?
It seems to be U.S. pressure for Japan to seriously hike its defense spending, from the current 1.8% of GDP up to 3.5%, maybe even 5%. Japan views this as, a sovereign decision, and they face real domestic political difficulty doing that because of their massive public debt.
Plus, Trump has floated keeping a 25% tariff on Mr. Japan cars. That certainly doesn't help relations.
No, definitely not. In terms of regulatory focus back home, Senate Republicans reached a deal on a 5-year freeze for state AI regulations.
Interesting timing, especially with that recent study finding, was it 88% of AI health responses were false? Raises questions about oversight versus innovation.
It does. And just a few other quick political developments. Trump reportedly secured a mystery buyer for TikTok, but it still needs China's approval. On the election side, Republican Senator Tillis decided not to seek re-election after primary threats from Trump shows Trump's continuing influence. Trump's also expected to visit the alligator Alcatraz detention facility. And more broadly, there are reports of American pride falling sharply among Democrats and Gen Z. And locally in New York, Mondani is fighting off a communist label in state politics.
Okay, quite a mix. Now let's talk about a really significant development in U.S. immigration enforcement. This White House directive to ICE targeting Home Depot stores specifically.
Yeah, this is major. These locations, especially the parking lots where day laborers gather, have become, well, some are calling them war zones. The White House cites unlawful employment as the reason.
And we've seen those cell phone videos.
Yeah.
Agents taking people down, smashing windows, witnesses reacting with real outrage, even chasing the agents.
It's intense. The White House rationale is explicit. Remove the incentive for illegal border crossing. They argue illegal employment is one of the main incentives used by cartels and gangs.
And has it been effective from their perspective?
Apparently, yes. Reports say Home Depot parking lots are now essentially empty, dropping from maybe 200 day laborers down to less than 20. Indicates a real fear of ICE presence.
Now, ICE's official stance is that these aren't random raids, right? They're targeted enforcement operations.
Correct. They say they're looking for specific individuals who've had due process and have been legally ordered removed. There are like 1.4 million immigrants with such orders. They use fugitive operations sheets with specific targets, focusing on those who've already gone through the legal system.
But this approach is obviously deeply controversial for immigration activists.
Absolutely. They believe immigration enforcement itself is wrong, and they actively obstruct agents during these operations, sometimes getting arrested themselves. There was that example of Garcia, a PhD student, who said he was happy to get arrested if it meant an undocumented person, even someone potentially dangerous, could escape.
Which brings us to the counter-argument from law enforcement.
Right. They argue that this kind of activist behavior endangers agents and actually allows potentially dangerous individuals to get away. They emphasize that individuals who cooperate and haven't done anything wrong, well, they don't need to be chased. It really highlights these starkly opposing views. Are these individuals criminals or just honest people looking for work?
It's a really divisive issue. Okay, shifting our focus now to broader global economics, we're hearing louder warnings coming out of Europe.
Yeah, German Chancellor Friedrich Merz issued what's being called a dire warning to EU leaders. He's pointing to rising debt levels, state, corporate, household debt, creating conditions ripe for a financial crisis. He stressed there's no acute danger right now, but vigilance is absolutely crucial.
And Spanish Prime Minister Pedro Sanchez echoed those concerns, right? Questioning how EU members could possibly meet that new 5% GDP defense spending target for NATO, given already strained public finances.
Exactly. It reflects this broader pressure on European economies. And German Finance Minister Lucas Stocker was even more blunt about a potential crisis, saying the probability that it will come is very high.
Wow. High probability. Okay, from those global anxieties, let's broaden the view again, this time to China. A lot going on there, too, politically and economically.
Yeah, there were those recent rumors about General Secretary Xi Jinping maybe losing power, fueled partly by his absence from the BRICS summit, maybe a perceived drop in state media coverage.
But that might not be the case.
Well, a counter-analysis from the U.S.-backed China Media Project, which tracks these things meticulously in outlets like the People's Daily, suggests otherwise. They found only a modest, kind of normal decline in Xi's mentions, no significant increase for other leaders. Their conclusion, his position looks just fine.
Interesting. Okay, separately, China's dealing with some severe weather, right? Historic flooding.
Yes, really bad. Torrential rains, historic flooding in southwestern Guizhou province. Reng City saw its highest water level since 1954. They've had to trigger the highest emergency response level.
And Beijing's response.
They're overhauling their flood compensation system, expanding eligibility, increasing central government support to cover 70% of payouts. It's partly seen as a political calculation to reduce potential unrest because, an effective flood response is really tied to the state's legitimacy in China.
Makes sense. Okay, what about trade news involving China? Heard something about rare earths.
Yes, a potentially significant breakthrough. China has pledged to expedite approval of rare earth export licenses to the United States, confirmed by officials on both sides.
That sounds big. Why is it so important?
Well, China has a near monopoly on these high-powered rare earth magnets. They're absolutely vital for EVs, military hardware, consumer electronics, you name it. We saw the impact recently. Ford had to halt production at some U.S. factories because they couldn't get enough magnets.
So what's the trade-off?
Washington apparently agreed to roll back some measures targeting Chinese entities, but Europe and Japan reportedly frustrated they're being cut out of these crucial exports.
Okay, now for something less positive coming out of China. This issue with pension funds.
Yeah, this is concerning. Reports of widespread misappropriation, basically theft of state-run pension funds by local governments. About 60.2 billion yuan, roughly $8.5 billion USD, misused across 25 regions.
Why is that happening?
Local governments are squeezed, shrinking tax revenues, the deep real estate downturn, but surging spending obligations. Even though the central government gets most tax revenue, localities have to cover about 85% of public spending, creates immense pressure and temptation.
And the real-world consequences.
Painful. Nearly 3 million vulnerable people left without pension coverage, disadvantaged elderly, farmers whose land was expropriated. Michael Pettis, the finance professor, notes this kind of thing really undermines claims that strengthening the social safety net will boost spending. Credibility, he says, will take years, even decades to rebuild.
That's tough. Okay, and finally from China, something a bit different, a controversial video game.
Yeah, kind of interesting. A new game called Revenge on Gold Diggers. later renamed Emotional Fraud Simulator, surged on Steam. It's sparking debate about gender representation, emotional abuse, and it got controversially banned on Bilibili, despite being popular, apparently linked to real-life relationship scams.
Huh. Okay. From economics and social shifts, let's turn now to conflict updates around the globe. What's the latest?
All right, starting with Iran-related conflicts. Iran revised its Evin prison strike toll and released judiciary reports on war dead, giving a bit more clarity on the human cost. The UN nuclear chief issued a pretty stark warning Iran could start enriching uranium for a bomb within months. Serious proliferation concerns there.
Wow, months.
Yeah. And a top Iranian cleric declared Trump and Netanyahu enemies of God in a new fatwa, shows the escalating rhetoric. Interestingly, intercepted Iranian communications apparently downplayed the damage from recent U.S. attacks. And diplomatically, Trump stated that some countries expressed interest in joining the Abraham Accords after those Iran strikes, hinting at potential shifts in regional alliances.
Okay. And the Israel-Hamas conflict. Still ongoing.
Very much so. Israel is reported to be stepping up its Gaza bombardment, even as White House talks on a ceasefire are happening. Shows the intensity remains high despite diplomatic efforts. Trump has also called for a deal on the war and the return of hostages, adding to that global pressure for a resolution.
Got it. Any other notable global developments on the conflict or defense front?
A couple of quick ones. Denmark has now included women in its military draft, a significant shift reflecting changing defense strategies in Europe. And in a typically bold statement, Trump said he will get the conflict solved with North Korea, putting that long-standing challenge back on the table, at least rhetorically.
Wow. Okay, what a deep dive. We've really uncovered this intricate web today: global financial pressures, shifting geopolitical alliances, domestic policies.
It really makes you reflect, doesn't it, how these seemingly distant economic warnings or foreign policy tensions, they can ripple right through supply chains, affect national budgets, even impact local communities and individual liberties, like that immigration enforcement we discussed.
Absolutely. So as you process all this information, maybe the question to mull over is this. In a world that's so interconnected, with information flowing so fast, what does it truly mean to be well-informed about all these complex, converging challenges?
Something to think about. Thank you for joining us on this deep dive.
Yeah, thanks, everyone. If you enjoyed this conversation, found it valuable, please do remember to like and subscribe to the show. It really helps us keep going. And if you'd like to help us out financially, you can find our GoFundMe page link in the description. Your support is what keeps the deep dive exploring.